Hi, this is Lynn from Mapit.
This is Randa with Mapit.
For over a total of 10 years, we've dedicated our lives to helping our clients sell, buy, and lease real estate. Our mission is to share our story and experiences in hopes of helping others on their real estate journey. Welcome to the Mapit Show. So this is apartment 180 in the Queens Manor condominium here in Flushing, Queens. And this building we have 22 separate units, mostly one bedrooms and two bedrooms. And we have 7 two-bedroom units, and the rest is all one bedrooms. And 12 parking spots downstairs in the garage.
So tell me a little bit about the significance of Flushing, Queens, especially when it comes to prospective Chinese buyers.
So a lot of the Chinese buyers, obviously, as you know, Queens is mostly predominantly in the last few years a huge population of Asians now, not just Chinese but also Koreans. And a lot of people, they like Chinese people, they like to be in newer buildings. So there's been a lot of new developments, and that's why most of the buyers are also predominantly Chinese buying into the new condominiums.
The price ranges that typically attract certain types of buyers, and again, what exactly they're looking for to make these deals, and why it appeals to be here in Flushing and in New York as well.
Okay, so it really depends on the building and the amenities in the building. For this particular one, it's very simple. It's walking distance to the 7 train. The location is pretty good. We're only half a block to Parsons Boulevard as well. So in terms of this type of condominium, the apartments are roughly between $800 to $1,000 per square feet.
And just how long have we seen influx, or how long have we seen foreign investment and Chinese investment really start to play a big role in the New York property market?
Especially since I believe from my experience around 2012-13, there was a huge influx of Chinese money coming in, and there has been a lot of development since then as well. And especially 2015 and 16, there was huge newer buildings coming up, newer communities as well. As you can see, Flushing Commons, you have the Tangram, Skyview, all of that.
And I guess just tell me a little bit about when did we first start? When did you first start?
So since it's become more restrictive on getting sending the money over to the U.S., it has impacted us in a negative way. The market has become, it's been slower than before. In 2017, when you put a listing on the market, it would fly off the shelf right away. But then you can even overprice it just a little bit, and you'll still get over asking. But now it's not the same anymore. Now you have to price it right, and then once it hits the market, it takes some time as well to get it sold.
Do you have a sense of what has happened to general prices? Can you quantify that in terms of percentages, or is it just too abstract to really tell just how big an impact it has on the bottom line of properties?
In terms of the prices, since the highest that we've seen, so I'm not going to give you percentages, but I can tell you that right now there's a huge gap in terms of what sellers are expecting and what buyers are offering. For example, the sellers are still thinking it's somewhat of a seller's market. And then the buyers coming in, they think it's a buyer's market. So right now we have this sort of a gap in between where we have to somewhat meet in the middle somewhere, but sellers are not realizing that it's not the same as what it was before. So we're having, it's tougher to get them in the middle.
And when we're seeing this drop in demand, or people less willing to pull the trigger when it comes to these properties, is this impacting the highest end of the market, the lowest end, or all the way through?
Okay, so in terms of the price point, anything over 3 million from what we've experienced, anything over 3 million, they're kind of sitting on the market right now. Anything that are still within under $1 million, it's still selling pretty quickly.
And I mean, do we get a sense of why that's the case? Is it because of the caps on the amount of capital that's allowed to leave the country now, or is it just, you know, has that always been the way that the top end of the market is a little bit more sturdy?
So right now we are seeing that anything under $1 million, it's still most of the money that are, this is in particular to just Chinese buyers, the people that are here and they have connections in China, they do have money, you know, that are already here, and even with the money coming in, it's so restrictive, you can't have that much in big amounts coming to the US. So that's why a lot of the homes, they're capped within like maybe 800,000-900,000, and those are still moving. But anything over, because it's such a large amount, we see that there's been a slight challenge.
Mm-hmm.
To help all of the foreigners to buy an investment property here, I know a lot of the banks right now, they're, well, maybe not a lot, but some, I know one particular bank, what they're doing is they have a program now for foreign investors where they can, with 30% down, they'll finance the other 70%. And it's really helping bring more of the buyers back into the US.
Okay.
Yes,
That's
because
great.
now they have this extra incentive as well.
Flushing has almost become a new Chinatown, with all of the new development coming in, which a lot of Chinese people love to stay in the same community. So this is one of the community with most of Chinese people all over New York.
Just how important are foreign investors for New York's property market, in your experience?
It's really important, especially with new development, a lot of like large money coming in. It helps to like kind of like take the recession out from our last recession, help the New York real estate market boom.
Of that, just how significant is investment from China as well?
China, you're talking like that's 2 years, like 2 years ago, that you can see a lot of cash deal going on, like Long Island or Manhattan, like it's 2 million, 3 million, and one of the investors bought 28 million on cash in Manhattan. So but you rarely see it this year. So they kind of like holding back.
In terms of the sales that you do, how much of it is attributed to foreign investment, particularly from China?
I would say for me it's like 40-60. So 40% is like, you know, from the foreigners, like my background from China, and the 60 is local.
Mhm.
So we're still like local buyers.
And is that just in this area, or is your agreements and expertise across New York?
I wouldn't say across New York. I think it's particular in this area has a lot of more, like particularly focused in Manhattan and Queens.
Gotcha.
Yeah.
Of that 40%, roughly, in your experience, how much of that 40% is from Chinese investors?
I would say at least half of that.
Okay.
Half of that.
So pretty big chunk. And then does that change, presumably, in Flushing when it comes? Yeah, I mean, how just for audiences that I know a lot of people, of course, heard of Flushing and how big and extensive a Chinese community is here, but just how much of that investment when you're selling properties like this one here in Flushing will be from Chinese investment?
Let's see, I'll give you an example of the schedule, which is pretty much the biggest development. They already have CFO everything. Last year it was almost like last year, almost sold out for the second phase of their development. This year they couldn't sell their last phase because of that dramatic change of foreigner money couldn't come in for whatever reason. So that's, I would say, like it's have tremendous impact of our market.
Just how much of an impact does it have on a day-to-day?
It takes longer to close, and sometimes it couldn't even make to the closing table. And we just had talked to a broker yesterday. 2 out of 3 this deal couldn't close because of the foreign money couldn't come out, like the money from China.
What are we hearing from prospective buyers about why that's the case? Why people are suddenly holding back on making these investments?
There's a couple of reasons. The exchange rate back in 2 years ago was like $1 is like 6 point something RMB. Now it's almost 7. So if they carry their RMB, which is Chinese currency, to here, which is going to cost them more to buy in US. And another is a restriction of money coming out. Years it's always been 50,000. Now it's only 20,000 per person. And another reason I would see they're holding back because New York market is also lagging themselves. So I would say they kind of like wait and see. I would say that's the reasons.
Are you hearing the political and the trade war tension between China and the US having an impact when it comes to buyers' concerns about making substantial investments in the US as well?
Of course. It's more like worry, and all of the news actually not helping. The news in China is making it maybe bigger problem than here. It's like everybody kind of like holding it back to see where is that turning. So it's actually has a huge impact, and that's also government is more restrict.
What impact do you think it would have for New York's property market if we see consistent decreases when it comes to foreign investment, especially foreign investment from China?
If that keep continue, it's really I don't see a bright future because it's also like in our news channel like recession is coming. So everybody, like Chinese people has a habit. We have a saying like we buy when it's go up. So when they see it's coming down, they will just hold. Like they will just like hold it off their investment. So the market or the buyer dictate the market. So that's gonna have a huge impact in our real estate market.
Are we seeing a lot of buildings that are being created that are currently unempty because of this downturn, because of this difficulty to now find buyers that was unexpected a year or two ago?
I would say that is take seller willing to gain more recession, like kind of like seller's concession. Instead of lowering the price, they will offer to pay the closing cost. They will a lot of places in Manhattan they offer 2 or 3 years common charge for free. So there's more enticement to the buyers now. Like they are trying to entice the buyer to say, hey, we offer all of this, so hopefully they will have more deals. But definitely we're seeing longer time to close the deal and longer time you see a lot of like price improvement. That's another fancy way to see price drop.